Hello and welcome to today's morning report on Thursday the 24th of March with me, Rich Perry Market Analyst at Hantec Markets. Let's look at these European markets, and they are quite sharply lower actually. We've seen a falling away of the oil price. A couple of factors really. We've got this declining oil price, and that has continued over the last 2 or 3 days now. This is beginning to really impact on sentiment. European European equity markets are all lower. 1.4% on FTSE, 1.5 on DAX, 1.9 on CAC, and that's all coming about with this continued sort of dollar strengthening. The dollar has strengthened over the past few days as a succession of Fed members have come out and talked up the possibility of an April rate hike and sort of turned more hawkish on monetary policy. That is just unstabilising generally, I think, for markets because they don't really know what the Fed's doing, and it seriously does sort of give the Fed pretty much even more credibility issues, even if they didn't have them in the first place, because they've only just sort of changed to a massively more accommodative monetary policy, and now they're coming out with Fed speakers with hawkish statements. So it's very confusing for investors, and seriously, there's a little bit of selling pressure coming through. You've also got possibly some movers ahead of the Easter break as well. So that is sort of certainly factoring through these markets today. Now, in terms of what we've got to look forward to today, we've got a bit of data to come out. We start off with the US durable goods, which is at 12:30 today, and it's expected to come in at minus 0.2% on the month. It's a notoriously spiky figure and quite difficult to predict, I think. So it'll be interesting to see whether it comes out of that. But it has a volatility element to the dollar. And then we've got also a couple of other indicators this afternoon for the US. We've got flash manufacturing PMI at 145, and also the Kansas City Fed manufacturing at 3 o'clock. Now that Kansas City Fed manufacturing will be interesting, considering we had the Richmond Fed, which surprised massively to the upside the other day. So the markets will be certainly looking at that. And then finally at tonight we've got the Japanese CPI at 12:30. It's expected to just come up slightly higher on the core basis to 0.1% there. So as I said, the August bank holidays ahead, so the markets are a little bit lower. Now, my chart of the day is the Canadian dollar, and we've seen. Let's go on the daily chart first. Sorry, we've seen the improvement in the the dollar loonie price coming as the oil price has fallen away. Now, the interesting thing is that with this technical development is that we've now broken the downtrend. And that sort of now starts to question whether we're going to get a continued Canadian loonie strengthening. Now, you sort of look out for these momentum indicators. I'm looking at the RSI, which has consistently fallen over around the sort of mid to high 40s. Currently at 45, so that's at a level at which, if it starts to break above 50, you'd question whether we're going to get a recovery or not. You've also got the stochastics, which have crossed higher. They did a similar move back in early Feb, but failed around the sort of 45 area, and again they're rising quite strongly at the moment. Can they continue to do so? You've got the 21-day moving average as well, which interestingly was used as a base of resistance back in late Feb. That's basically being tested now. So all these different factors are suggesting possible turnaround now in this chart. And then looking at the hourly chart, you can certainly say that downtrend's broken. You've also broken above the initial resistance around 132 figure. And that sort of now reopens the next resistance, or next start of the key resistance at 34 figure to 34.50, which has been again back on the daily chart. That 34.50 mark is this breakout resistance that we got back from September. So that's an interesting level. 34.50. So we're getting this improvement in the dollar CAD. Whether it continues or not is now back into this resistance band. So it's a key moment really for this chart near to medium term. Also with the momentum indicators having unwound back to levels that previously where you've seen the selling pressure coming through. So continuation of this rally above the 21-day moving average towards that 34 figure area resistance would be interesting, because it would certainly coincide with the improvement or continued improvement in these momentum indicators. So certainly want to watch as the oil price continues to fall. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.